It is 8:52 a.m. Pacific Daylight Time. It is the 27th day of April 2026. This is episode 1308 of Bitcoin and Western Union finally getting off of their ass because they want to join the stablecoin race. Yeah, it took them this long for Western Union to figure out that they are going to lose their ass when it comes to cross-border remittance. So they're, I don't know, Hail Mary. All praise the Hail Mary. It's probably not going to work for Western Union, but we will see. That's going to be our first thing up for the day. Chain split. We're looking at a chain split from a guy that has been in the game for a long, long time. He's been really controversial for that entire time, and we're going to talk about what his plans for this chain split are, and I'm not at all thrilled about it. So I honestly, it's not really going to matter. It's going to be a shit chain, just like Bitcoin Cash was, but you know, it's by a guy with a name that a lot of people know in the industry, so it's not anything to sneeze at. Brazil just bans prediction markets altogether. And then in the second part of the show, Gemini and Agentic trading, and I asked the question as usual, what could possibly go wrong? Novogratz is predicting that the Clarity Act will be signed into law. We'll tell you when. And French authorities going after quite a few people for wrench attacks in France, where the majority of these wrench attacks seem to be taking place. But let's do Western Union. Let me get warmed up here before I end up talking about the damn chain split. Western Union eyes May as a rollout for its USDPT stablecoin. Stephen Cotti, writing for Cointelegraph, financial services giant Western Union is targeting May for the rollout of its new stablecoin as part of a crypto plan that includes its digital asset network and US dollar stable card. Oh boy. Quote, over the last few months, we've crossed an important threshold. It's no longer a question of if Western Union will be active in digital assets. It is now, how fast can we scale? Said Western Union President and CEO Devin McGranum during the company's first quarter earnings call on Friday. Quote, at the foundation of our strategy is USDP, our US dollar-backed stablecoin. USDP is now in its final stages of readiness and is expected to go live next month, he added. Well, a growing number of traditional financial institutions have been adopting stablecoins. Lamine Brahimi, co-founder of crypto custody provider Taurus, told Cointelegraph earlier this month that banks and corporations all across Europe are actively selecting infrastructure partners to support stablecoin adoption. Western Union first announced the stablecoin in October and said it would be built on Solana and issued by Anchorage Digital Bank. Good luck with that. It plans to combine it with the digital asset network to allow users to use the token seamlessly. McGranahan said that exchange partners will support access, conversion and distribution of USDPT, and banking and financial institution partners in priority corridors will then facilitate direct settlement and treasury use cases. Quote, together, these relationships position USDPT as a foundational asset for scaling digital payments and settlement across our platform, he added. Currently, US dollar-denominated stablecoins account for the lion's share of the $320 billion stablecoin market capitalization, and of course, Tether leads with a market cap of more than $189.7 billion, followed by Circle's USDC at $77.7 billion, and Sky Dollar at $8.2 billion. And I've never even heard of Sky Dollar before. This is the first I'm hearing about it. McGranahan added that Western Union's digital asset network, which aims to allow stablecoins and other cryptocurrencies to move across its global payment system and link to real-world cash access, will add its first partner this week. Quote, our partner pipeline represents tens of millions of crypto wallets globally, creating a powerful distribution channel that brings digital asset users directly into Western Union's retail and digital network, solving an industry-wide issue of ramping from crypto to cash as a safe and effective utility, end quote. Western Union's digital asset network adds its first partner this week. Last month, Western Union announced the digital asset network would allow users to convert digital dollars into local currency at more than 360,000 collection points worldwide. Meanwhile, Western Union is also planning to launch a US dollar stable card, which will allow users to hold and spend stablecoins later this year. McGranahan added that going forward, Western Union plans to make digital assets a core part of its platforms. Quote, the focus ahead is scaling, expanded adoption, increasing velocity, and embedding digital assets more deeply into Western Union's core money movement platform, end quote. So let me go right back up here. I'm going to scroll up to here to the top, and let's see. Yeah, here we go. Here's the quote from McGranahan. Over the last few months, we've crossed an important threshold. It is no longer a question of if Western Union will be active in digital assets. It is now, how fast can we scale? It's the how fast can we scale statement that leads me to believe that they are scrambling. They put this off for far too long, just like all the rest of legacy finance has. And like the rest of legacy finance, they are scrambling for a product, any product. And right now, stablecoins are the new hotness, baby. And it just goes to show how narrow-minded all these people actually are, because it takes them forever to move. And when they do move, they're already in competition with much larger fish. And I just don't think Western Union really is going to have the horsepower to move ahead of Circle and Tether. I just don't think so. I mean, hell, even Donald Trump's stablecoin is getting traction. I don't know what, I mean, now, I will say this. Western Union does have a distribution network that's pretty large. And from that standpoint, that is the only thing that they have going for them. It's not going to be the efficacy of the stablecoin, unless they screw that up, which isn't entirely impossible. It's going to be their distribution network. It's like Charles Schwab and their Bitcoin ETF, because they had, 15,000 financial advisors, a literal army of them. So their distribution network is working for them. We'll see if Western Union's distribution network works as well for them. But honestly, I just don't think so. I think Western Union is a little too late to the game. Whatever. Now let's get into the big story for the day. A longtime developer wants to split the Bitcoin blockchain and reassign Satoshi coins. The community is calling it a theft. This is out of CoinDesk, written by Omkar Godboll. Longtime Bitcoin developer Paul Stork has been trying to overhaul Bitcoin's architecture since 2015, but the broader community hasn't budged. So now he has proposed a dramatic step called eCash hard fork that involves copying Bitcoin's code to launch a separate version of Bitcoin in August, while giving existing Bitcoin holders equivalent tokens in the network for free. Yeah, it's not for free, and I'm going to come back to that. The community, however, is criticizing the funding part, which involves reassigning coins linked to Bitcoin's missing founder, Satoshi Nakamoto. So what's a hard fork? Think of a hard fork like a railway line splitting in two. Trains start from the same station, but at some point the line splits, helping trains reach completely different destinations. When a group of developers cannot reach consensus on a proposed change to Bitcoin's code, they copy the existing blockchain and launch it as a separate chain which shares Bitcoin's entire history up to the point of the split, but diverges right after the split. moving forward with its own rules, its own features, its own tokens, and its own direction. That's precisely what happened in 2017 when the debate over Bitcoin's block size reached a tipping point, culminating in a chain split and the creation of the Bitcoin Cash blockchain with its native token BCH. The technical dispute centered on Bitcoin's 1 megabyte block size limit, which caps the number of transactions that can be processed every 10 minutes when new blocks are added to the blockchain. Hence, some favored increasing the block size, but the community remained divided. It eventually led to a chain split. This proposed hard fork from Paul Stork will create a new chain called eCash with native eCash tokens. Quote, hold 4.19 Bitcoin at the time of the fork, get 4.19 eCash. You can sell it, keep it, or ignore it entirely. No, you can't, and we'll come back to that in a minute. The fork is scheduled for Bitcoin block height 964,000, which will occur in August of 2026. A coin splitter tool will then be released to help holders cleanly separate their Bitcoin from their new eCash. The new chain will be a near copy of Bitcoin's existing blockchain, with one critical addition called drive chains, a scaling architecture Stork first proposed back in 2015 and formally submitted to Bitcoin developers as BIP 300 and BIP 301 in 2017 and 2019, respectively. Drive chains are side chains. They're tethered to the Bitcoin blockchain, allowing seamless movement of Bitcoin between the main chain and side chains without changing Bitcoin's base layer. Each side chain can operate under its own rules and features, essentially allowing developers to build new capabilities on top of Bitcoin without requiring the entire network to adopt those changes. You can think of drive chains as service roads attached to the main highway. When the highway is congested, drivers can exit the highway and travel on the service road at different speed limits, and then re-enter the highway when it's clear. This way, the highway never changes, yet more traffic is handled more efficiently and the journey becomes more flexible for everyone. 7 drive chains are already in development, Stork said on X, including a privacy chain modeled on Zcash, a prediction market called TruthCoin, a decentralized exchange called CoinShift, and a quantum-resistant chain called Photon. Stork wants to use coins that would have gone to Satoshi Nakamoto's equivalent addresses on the new eCash chain to bring investors on board before the fork goes live, a decision he calls necessary, but which has riled the community, with some calling it outright theft. A potential hard fork would bring Bitcoin's entire transaction history to the new chain. So, every Bitcoin balance, including Satoshi's 1.1 million Bitcoin sitting untouched in wallets that have never moved these coins, would show up as an equivalent eCash balance on the new chain. As per the plan, fewer than half of the Satoshi equivalent eCash coins will be assigned to investors today. The precise mechanism of how it's being done remains unclear. But since eCash doesn't yet exist, the pre-hard fork assignment seems to be a promised credit following a successful hard fork. The plan, he argues, will ensure collaborators have a tangible incentive to get involved early, building momentum and completing work ahead of launch. Without this mechanism, the project can turn into a zombie project that ships unfinished. Worse, it could become a centralized project where a small group of developers gains outsized control over the chain's direction. The industry response, however, has been quite negative. Quote, taking Satoshi coins is theft and disrespectful, and eCash is already used for lightning payments with Cashew and Fetty. Those are poor choices, Bitcoin advocate Peter McCormick said. Josh Elythorpe, Chief Technology Officer at Pixelated Inc., expressed concerns about the precedent it sets and how it would eventually be a risk to everyone's BTC holdings. Quote, eCash, setting the precedent that they can and will steal coins. Now it's Satoshi, but it could be anyone later on. Also misrepresenting the BCH fork, stealing another project's name, and not having replay protection, Eli Thorpe said. All right, so that's the end of the article, and a rather messed up way to end that thing. So what do we got here? There's a couple of things that I noted on our way through this, but the first one is this: giving existing Bitcoin holders equivalent tokens in the new network for free. All right, so what Paul's suggesting is they're going to copy the entire history. Well, they're going to copy the blockchain of Bitcoin. And that blockchain holds every transaction ever done all the way back to the very first block that we call the Genesis block. Every transaction that's ever been made, every wallet balance is all there. And that's what he was saying in Paul's X post when he said, hey, if you have 4.19 BTC, you're going to get 4.19 eCash for free. And then he goes further and says, you can sell it, you can keep it, or you could just ignore it. None of this is true. You do not get this for free, and I'm going to tell you why. Back in the day, when hard forks happened, and there were a ton of Bitcoin hard forks, and it operated the same way because it's sort of the only way that you can do a true hard fork, is that you have to copy the blockchain, like I said, all the transaction history, all wallet history, whatever it is that you had in Bitcoin in your wallet before the split. They took a snapshot of the blockchain, used that as the basically the database to feed the new the new project, and you had the equivalent amount of whatever token that they took a snapshot of if you held any Bitcoin in a wallet address on the day of the snapshot. Okay. Back in the day, nobody gave a shit. I mean, nobody in the federal government really cared. They were still thinking that Bitcoin was just stupid all the way around. So they don't really care about what happened. But now they do care. Now hard forks of Bitcoin are going to be problematic. And this whole airdrop, all these airdrops from other chains, these have the same problematic structure as well. Why? Because you're literally being given value. And that's income. And for most of the nations on this planet, that incurs income tax because you got money. And the government, being the thieving sons of bitches that they are, want a cut of that. So if this happens, there is one form that you can fill out but you have to do work. You have to go, and I wish I could tell you the form number. But there is a letter or a form that you can sign that describes the asset that you've been given, and you disavow it. And then you sign your name, and I don't know if you have to have it notarized or what, but you sign your name and you file it with the IRS so that they know that you want to have, that basically you are completely distancing yourself from this asset. That's what you have to do. And because you have to spend time doing that, it is not free. If you don't do it, I suppose, if you never spent the coins or you never traded the coins, you never did anything after you got them, I don't know if you'd be safe or not. I don't know what this new environment looks like. But this is what Paul is doing, is he's causing you to have to think and have to do something and reach for things and sign things and go print out a sheet of paper so that you can mail it to the IRS so that in worst case scenario, they don't come after you and say, hey, you got when you got the coins, they were worth, I don't know, let's say you had $1 million worth of Bitcoin and when the eCash drops, it's going to be worth 1/10 of that. So you're on the hook for income of $100,000. Now, I do not know what this token is going to be worth when it drops, and I don't fucking care. What I do care about is that you're going to get the statement you're going to get them for free is untrue. Be very aware that is an untrue statement. There is nothing free about this. And the fact that he's doing this shit without I have not given consent. I have not given consent. And even if right after the chain split, I take all of the Bitcoin, the real Bitcoin, in my wallet and I move it to another wallet address, it doesn't matter. I'm still literally on the hook. The only way that I would not be able to be on the hook is right before the snapshot happens. I literally sell all of my Bitcoin for cash or some shit coin or something like that so that my wallets would be empty. And then pray to God that nothing really, really bad happens, and then buy as much of that Bitcoin back as I possibly can, and then have it in a brand spanking new wallet that I created just for that. Not even associated with my private keys, literally building brand new private keys and brand new wallet addresses from those private keys, and then sell all the cash or whatever it is that I bought with my Bitcoin, buy more Bitcoin, and then transfer it to the brand new private keys. That's the only way. And that's a lot of work. And it's also a lot of stress because you never know what's going to happen with the price of Bitcoin. You could end up with more Bitcoin, but with my luck, right after I sold it all, to try to get away from this whole thing, the price would crash like 80% or something like that. Or the price would rise like way, way higher, and I'd have like way less Bitcoin. That's what I'm trying to say. But this notion that this is going to be free is so blatantly dishonest that I cannot believe that Paul Stork is telling people that. You could just ignore it. No, you cannot just ignore it. Not now. Maybe back in 2017, but not now. You cannot ignore it now. The fact that he's using the term eCash is another sticking point. That's going to cause extreme confusion because it is not the same eCash token that's being used, like in the story, what Fedimint uses and Cashew uses. That's not the same kind of eCash, and it's going to cause problems. But Paul doesn't seem to fucking care. He's been itching to release drive chains ever since 2017 and 2019. He's been talking about drive chains since 2015, and the only way that his BIPs, BIP 300 and 301, have been soundly ignored, probably for good reason, by the Bitcoin developer community. Not just Core. Nobody else wants to work on them either, except for Paul Stork. The Liquid network out of Blockstream literally does have a side chain. It's not technically called a drive chain, but it is a side chain. But they've got their own. They're not working. They're not trying to implement Paul Stork's technology. So even Adam Back's outfit is like, we don't have nothing to do with this shit. And so, like I said, there's probably a reason that we don't have a whole bunch of people chomping at the bit to make sure that this shit goes through. And the fact that he's naming it eCash causes confusion. And the other real problem here is that he doesn't have replay protection. And I don't want to get over my skis on replay protection, but essentially it sounds to me that the wallet address structure, like when you look at a wallet address and it starts with like BC1 or whatever, and then it's got a whole bunch of string of numbers and letters behind it that identifies this specific wallet. When you split Bitcoin and you do not reconstruct the way those addresses look, it can cause a replay attack from one chain to another. And again, I don't want to get over my skis, but this is a major structural problem. And we've been through this many, 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 many times before. You do not split Bitcoin without completely restructuring all of the ways that there would never be any wallet address with BC1. That starts out with BC1. You would have to use a completely different structure, right? So Paul doesn't seem to remember the history of what's going on. And that's going to cause another layer of confusion that people don't need. I promise I will watch what the hell's going on with this particular chain split, because it would affect me, because I have a wallet, or I have wallets that have some Bitcoin on them, and I don't need this headache. I don't need this. In fact, again, what would happen? And I a long time, there was like, one of the earliest podcast episodes that I ever did, because I started this podcast back in 2018, was the suggestion that a class action lawsuit could have been filed against Roger Ver for the BC8 split, because it causes more problems than just for the user. Now, all the hardware wallet developers that support shit chains like Trezor and Ledger, and there's a whole host of them that support, other things than Bitcoin. If you want a solid Bitcoin only hardware wallet, go to CoinKite, buy a cold card, use code Bitcoin, and they only support Bitcoin. But the rest of the hardware manufacturers support other coins. And if they want to support Paul Stork's token, his eCash token, then they're going to have to build a wallet for it. And then they're going to have to release an update for all the users that own one of their hardware wallets. And those users are going to have to update the firmware on their devices. And this is a lot of work to go through for all these people. And back in the day when it was happening, seemed like every other month, there was a lot of people that were, a lot of developers that were really irritated that they had to go through this shit. But moreover, that was a lot of work for the developers. But again, getting back to the idea of a class action lawsuit against Roger Ver, one of the reasonings that I had behind it was that even back in the day when nobody at the government level gave a shit about Bitcoin, he was still forcing on us, and all these other people were forcing on us, the fact that all of a sudden we just got dumped a whole bunch of money on us. And that's a problem, because we live in a thieving environment, and people want they want a cut of everything that you make, everything that's given to you, everything. And this airdrop is going to cause a lot of problems, because now we have the DA 1099 that is going to be given to the IRS. We've already done our first filing with the DA 1099. So if your wallet exists on Kraken or Coinbase or something like that, and this thing drops, and they honor the drop by building a wallet for it, they're going to credit you with that eCash token, and they're going to send a 1099 or a DA 1099 to the IRS, and then you're going to be responsible for basically ratifying that by sending in your own copy of the same DA 1099 that says, hey, you got this money for free, and the government's going to want some. And you never know what's going to happen with the price of that token. Most likely it's going to crash 90%, but you'll be on the hook for the full amount of its value when you got it. It's just, this is irresponsible. It's irrational. And I have yet to hear anything about this new fork of Paul's being quantum safe. Since everybody else is scared about it, why isn't Paul scared about it? That's a question to ask. This guy's been in the business since 2015, probably before that. And yet he's releasing a fork that, as far as I know, has no quantum protection on it. Yeah, this is more about him feeding his own ego than anything else. And maybe he'd like to cover it with maple syrup. For my friend, Maple Trade. Get Maple Trade's maple syrup. He makes it by hand. He only has 10 of these things left. Right? So you buy them in sats. 41,153 sats is right around $32 right now. Shipping is included in the price. You get 1 quart. 32 ounces, 1 quart of Ohio pure maple syrup made by hand by my friend Maple Trade. He only has 10 left. You can get a 1 quart jug, 2 quarts, 3 quarts. You can get pints. You can get 12-ounce glass bottles. You can get 8-ounce glass bottles. The URL to his storefront is in the show notes. It's at takemysats.com/MapleTrade, blah, 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 blah. The full clickable URL will be in the show notes. Go there, make sure you use the code Bitcoin, and let me see if he gives you anything off for that. Dude, I wasn't prepared. No, you won't get anything off, but it will let MapleTrade know that I made a sale for him here on the Circle P. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services, but you will be buying into Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. MapleTrade's maple syrup, made by hand the old-fashioned way. I've had it. I love it. It's one of the most exquisite maple syrups I've ever had. That's MapleTrade's maple syrup. Brazil, going down south here. Brazil issues a sweeping ban against prediction market platforms. Andrew Hayward from Decrypt. Brazil's finance ministry blocked access to prediction market platforms on Thursday, targeting major platforms like Polymarket and Kalshi that traders use to bet on outcomes. Finance Minister Dario Durigan said the platforms violated betting regulations approved by the Brazilian Congress and that prediction markets were not legal nor regulated in the country. He added that blocking them would protect citizens' savings amid government efforts to reduce debt levels. Quote, "We have advocated for stricter enforcement and very rigorous regulation, which will continue to advance so that we can curb the negative externalities and social harm that unregulated gambling causes to the Brazilian population," Durigan said. Reuters reported that both Polymarket and Kalshi were inaccessible in the country as of Friday afternoon. Banco Central do Brasil issued a resolution prohibiting derivatives contracts based on sporting events, virtual gaming, political outcomes, and other non-economic benchmarks. The central bank cited risks to investor protections and market integrity. Chief of Staff Miriam Belcher said the measure aims to protect income, prevent financial loss, and reduce families' exposure to unsafe practices, end quote. The Brazilian crackdown reflects mounting global pressure on prediction markets. Portugal restricted Polymarket access in January, while multiple U.S. states have taken action. Most recently, Wisconsin filed lawsuits against Kraken, Robinhood, Coinbase, Polymarket, and Crypto.com on Friday, alleging their sports event contracts violate the state's commercial gaming ban. Now, that's the end of the article, and Brazil, I guarantee you, doesn't give shit one about the people of Brazil. They just haven't figured out how they're going to get their cut from it. That's what this is about. Let's run the numbers. CNBC, futures and commodities. Shit's breaking loose in the Middle East. I can tell by the charts. Brent North Sea is up 3% to $108.48. West Texas Intermediate is up only 2%, clocking in at 96.33. Natural gas is up 2.5% to $2.58 per thousand, and gasoline is up 0.4% to $3.47. Murban crude is up a third to 103.89. Metals are all down. Palladium is down almost 2 points. Gold is down a point to 46.90 and 8 dimes. Platinum is down 1.6. Silver is down 1.8. And copper is down a quarter. Ag is fully mixed today. Biggest loser is chocolate, 3.76% to the downside. And the biggest winner is wheat, 1.5% in the green. Live cattle up 1.4%. Lean hogs up 0.4%. And feeder cattle up 1 2/3 point. The S&P remains unchanged. NASDAQ is down 1/5 point. The Dow is down 1/10 point. And the S&P Mini is in the green by 1/10 point. And then we've got Bitcoin down again, $76,750. That is after we peaked at $78,000 somewhere last night. And then somebody decided to destroy all the longs. $1.54 trillion is the market cap of Bitcoin at this time. We can purchase 16.5 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,021,319.9 of. Average fees per block, 0.02 BTC taken in fees on a per block basis. It's about 35 blocks carrying 52,000 unconfirmed transactions waiting to clear at high priority rates of 4 sats per VByte. Low will get you in at 1. Hash rate dropping again, 907 exahashes per second is the hash rate of the Bitcoin network. I remain unconcerned as to how much security we have. From Soldier Boy Wins, Friday's episode of Bitcoin, and Jub with 1,313 sats says, taking advantage of the extra sats in my DCA, but kind of tired of the sideways action. Release the bull. Yeah, no shit, dude. Jason High 250 says nothing. Nick Dose with 199 says cheers. And Nostr Gang with 101 sats says absolutely nothing. And that's the weather report. Welcome to part 2 of the news you can use, and I'm laughing because of this. Gemini rolls out agentic trading, allowing artificial intelligence bots to directly manage crypto exchange trading accounts. Again, I ask, what could possibly go wrong? Daniel Kuhn, writing for theblock.co. Gemini is looking to make it easier to lose money. I mean, easier for users to let AI guide their trades. On Monday, the crypto exchange rolled out agentic trading, which lets users connect AI models like Claude and ChatGPT to their trading accounts. This will make it easier for AI to autonomously monitor markets, place trades, and even execute trades and manage risk based on predefined trading strategies, according to an announcement shared with The Block. Gemini referred to the feature as, quote, the first agentic trading tool to be available directly through a regulated United States-based exchange. We believe we're at the beginning of a fundamental shift in how people interact with financial markets. Agentic trading isn't just a feature. It's a bug. No, it's a new paradigm where AI handles the execution, the patterns, and the discipline while you focus on strategy and goals, Gemini wrote. Well, the tool operates through the MCP open standard, initially developed by AI Studio Anthropic, and it connects AI agents to external tools and APIs. Gemini said it has integrated its full trading API with MCP. The move fits into the broader agentic AI trend that is taking root in and outside of the crypto sector, where users are increasingly providing AI bots access to digital services. Pausing to say, which is not that great of an idea anyway. Coinbase, for instance, has incubated the X402 protocol, an open payment standard now shepherded under the Linux Foundation, that provides AI bots access to crypto wallets and an entire app store of tools and services. Tempo is also developing the Machine Payments Protocol, a similar payment standard for machine-to-machine payments. Both X402 and MPP make use of the MCP standard, Gemini's agentic trading taps, though they are not specifically focused on executing trades on an exchange. Agentic trading also features a set of pre-built modular functions called trading skills. Yeah, an AI can call functions like find the spread to query the bid-ask spread for any trading pair, or retrieve candles to access historical data to power, quote, pattern recognition and backtesting. Gemini said it plans to introduce even more functions. Gemini, which went public late last year, recently shook up its C-suite with the departure of its, get this, chief financial officer, the chief operating officer, and the CLO, and I don't know what the L stands for, amid rising corporate expenses. Mizuho cut its price target for Gemini, citing weak trading activity despite growth in its crypto card offerings. Gemini shares are trading at $4.45 at publication time, according to block data. The stock has traded below $4 in recent weeks, and its lowest price since its debut, September the 12th, at $28 a share. So it's lost a whole lot. In March, the Winklevoss twins transferred $130 million in Bitcoin to Gemini hot wallets. I'm sorry, but okay, there's two things that are happening here. One is, this is really stupid to start doing this right now. Two, this is going to happen more and more. And it won't possibly always be stupid on the surface. It's going to be stupid in the overall scheme of things, because if you think agentic trading stops at Gemini, you would be wrong. Yeah, Kraken's going to do it. Coinbase is going to do it. I know all these people are going to do it, but here's the thing. If you think it stops at just Bitcoin and cryptocurrency, you're wrong. It's going to bleed. It's going to bleed out into legacy financial stuff. I think at this moment in history that derivatives are a terrible instrument in finance. I don't think they do very much. I think that they get people in much more trouble, and it adds pricing noise in a market that is already very, very noisy. We don't know what shit costs because of futures. And then when you start betting on what the futures are going to be, instead of actually buying the futures contract to say that, no, you buy a derivative. You basically make a bet on what you think the futures are going to be without actually buying the futures. And it just gets, you get derivatives of derivatives, and then derivatives like cubed. It sucks, man. And these agentic trading agents are going to be everywhere. It's going to be like a fungus that you can't get rid of. And I'm not talking about the good kind of fungus. There are bad fungi, like you don't want black mold in your house. That's a fungus, and you don't want to have a damn thing to do with it because it produces an airborne toxin. You don't want white rot in your house either. It won't make you sick, but it'll definitely screw up any wood in your house. And this shit's going to be all over the freaking place. And we thought there was noise in the markets now. Oh, you just wait. You just wait. In fact, this very thing is, I guarantee you, is going to charge Peter Schiff to say the only way out of this is to buy gold, because you physically hold a real piece of metal in your hand. I'm here to tell you, even that's not going to escape this shit, because there's futures prices on gold, and there's derivatives of those future prices, and derivatives of those, and derivatives of those. It's disgusting. This isn't going to be made illegal. The CFTC and the SEC will eventually embrace it. There will be regulations around it, but it's not really going to matter. It's going to screw everything up, and it's going to lose a lot of people that don't know what they're doing a lot of money. And this is where I want to go back to. We're a little too early for this to actually be something. I'm not saying that it won't work. I'm just saying this is extremely unsafe. This is an unsafe activity to engage in. And I hate gambling, and if you've ever listened to this show, you know I hate gambling. Like going to Vegas gambling, like roulette and playing, shooting dice and shit like that. Poker, not so bad with, because poker, in my opinion, actually takes skill to be able to execute. But roulette, dice, whatever else, no. There's no skill there. You can't increase or decrease your odds by having or not having skill in poker. But everything else, screw it, man. It's worthless. You know that if you've listened to this show. And yet I am here to tell you, I would rather you go to Vegas and play roulette than to get into this kind of shit right now. Now, is it possible that somebody will be able to use this with some really good efficiency and good efficacy? Hell yeah. There's going to be some people that it's just going to click with them. But we're going to have tons of these. They're going to be everywhere. They're going to be in oil and natural gas and gold and silver and platinum and frozen concentrated orange juice and fucking pork bellies. It's going to impact live cattle prices. It's going to impact feeder cattle prices. It's going to impact lean hogs. It's going to be everywhere. And like I said, it's going to be like a fungus. And once it grows in, it's never coming out. And it's all starting at Gemini. So that's our ground zero for the next phase of stupid when it comes to financial markets. Novogratz is predicting the Clarity Act will be signed into law by this June. Atlas 21. Galaxy Digital CEO Mike Novogratz has stated that the Clarity Act could become law by June 2026. Speaking during a podcast with Anthony Scaramucci, Novogratz outlined a precise timeline. The bill could reach the committee stage in early May, before advancing toward a presidential signature within the following month. The statement comes as the U.S. Congress continues to debate the fundamental provisions tied to digital asset regulation. So that's all we need to know about this one, right? So that's Mike Novogratz, and it's not like he doesn't have his ear to the ground when it comes to a bunch of this stuff. My gut feeling is that we're not going to end up with Clarity Act. We should. And it's not because I'm in love with the Clarity Act either. I'm just, I like the idea of a whole bunch of people that are basically sitting on the sidelines waiting for any kind of clarity at all, so that they can finally just say, okay, now I know the rules of the game, and I can do that, because a lot of the bigger players they're not going to come in until Clarity Act, until they get clarity on regulation about all of this stuff. Bitcoin and shit coins and stable coins and everything else. So Mike, maybe he knows something, because he's actually saying June. We'll see. I don't know. Meanwhile, in France, authorities charge 88 people in 12 crypto wrench attacks. It's a hell of a ratio right there. Stephen Kate is writing this one for Cointelegraph. At least 88 people, including 10 minors, have been indicted in connection with alleged wrench attacks against crypto owners in France, according to Vanessa Perret, the country's national prosecutor for organized crime. She said in a statement on Friday that 75 of the alleged offenders are being held in pretrial detention, with the arrest related to 12 cases currently under investigation by specialized investigating judges of the Paris Judicial Court and monitored by the National Prosecutor's Office for Organized Crime. Panaco, which is the National Prosecutor's Office for Organized Crime, has recorded 18 incidents in 2024, and then in 2025, that number rose to 67. Just in the first quarter, in April, 47 attacks in 2026 already. They are well on their way to doubling the amount of wrench attacks that they had in 2025. Blockchain security company Certic reported a 75% increase in attacks worldwide in 2025 compared with the previous year. Quote, the acts in question, particularly under the legal classifications of arrest, abduction, organized group sequestration, extortion, and attempts of organized group extortion, are of particular seriousness, both due to the harm caused to individuals and the methods used to obtain transfers of crypto assets under duress, Perry said. French law enforcement agencies investigating the incidents have merged several cases after discovering that some of the alleged offenders were involved in multiple incidents. Quote, these consolidations were made possible notably through the identification of individuals recurrently involved in multiple cases, thus revealing the existence of a structured network. Quote, investigations are actively ongoing under the authority of investigating magistrates to identify all perpetrators and instigators, clarify financial channels, and dismantle the networks involved. CASA Chief Security Officer Jameson Lopp has maintained a list of recorded wrench attacks worldwide dating to 2014, and he's personally recorded 29 so far this year. Paris said that the rise in cases means crypto holders and their relatives should be more vigilant and avoid overexposure on social networks that could make them targets, while also remaining wary of scammers posing as investigative service or judicial institution to obtain information. Blockchain intelligence company TRM Labs reported in May last year that wrench attacks have been on the rise because of the perceived pseudonymity of crypto transactions, the public visibility of wealth, and the ease of which bad actors can gather personal data online. Meanwhile, Telegram founder Pavel Durov suggested on Friday that the rise in attacks in France was due to the alleged misuse of crypto investors' tax data by a former tax official. So that's the end of the article. Be careful out there, ladies and gentlemen. Especially if you're in France. If you're listening to me and you're in France, be absolutely extra careful, because it is clear that there is a very well-organized crime group that is active in France. And that's the biggest news about this, is that they were able to consolidate many of these 12 cases together because the same individuals are performing these acts over and over and over again. So now what they've got is they've got a straight up organized crime group operating inside of France, specifically aimed at attacking people and getting a hold of their Bitcoin or whatever shitcoin they happen to own. And it's sad, but it looks like it's on track to get way, way worse this year. Because if there's already 47 reported attacks in France, and it's only April the 27th, and we still have 2 2/3 quarter of this year to go, then we are literally looking at 200 attacks, which would be well over double the amount of attacks in France, just in France last year. So if you're in France, please, for the love of God, be careful. And here's another thing. Don't even tell your family at this point. Which is kind of hard, because how can you convince them to buy Bitcoin themselves and basically get them on the life raft if you can't even tell them? Because if you do, then they're going to ask, well, you've never told us that you have any Bitcoin. And then you'd have to say that you either do or you don't. And now you've got a leak. No, I'm not saying go and tie up loose ends by offing your cousin. I'm not saying that. I'm just saying that's a leak. Like 2 years later, it's like, yeah, man, my cousin, he told me he had Bitcoin. I've been thinking about buying it. And he says that, and the guy gets overheard at a bar by somebody the cousin doesn't even know. All of a sudden, this person, I don't know, buys the cousin a drink, starts hitting on her or something like that. And this shit happens. There are people that hang out in bars, and they're just like, if they hear something and they figure, hey, if I get just the tiniest bit more information out of this, I might be able to make a score. They're all over it. And all of a sudden, the cousin gets a little tipsy and starts saying, yeah, man, he lives in this town. He mentioned this much Bitcoin. He works at this place. He's been telling me about Bitcoin for years and years and years, blah, blah, blah. That's all it takes, man. That's all it takes. So the vigilance that we have to start exercising at this point is going to be a step above the vigilance that we've been exercising heretofore. It's don't let it freak you out. Just do something about it. And for the love of God, stop wearing Bitcoin swag out in public. If you want to wear a Bitcoin t-shirt and support your favorite Bitcoin t-shirt maker by buying their wares, I understand that. Don't wear it in public. Don't wear it outside. Just, if you want to wear it outside, make sure it's because you're going to a Bitcoin conference. And if you stay inside the doors of whatever Bitcoin conference that you're at, you're probably okay. But if you go outside to a bar, change your shirt or socks or pants or whatever it is that you're wearing that makes you a great big fat target. Nobody needs this kind of aggravation. Nobody needs it. So just please be careful out there so that I can see you on the other side.
This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.